welcome all of you here this morning. Just a reminder to please keep yourself muted throughout the meeting, and we'll have time for Q&A later on in the hour. We're honored that you took time out of your busy schedules to join us today for this Small Business Loan Assistance webinar covering Vista Bank's Main Street Lending Program, as well as the South Plains Association of Governments and Caprock Business Finance Corporation's SPAG CORE COVID Relief Loan Program. At the Chamber, our mission is to strengthen, promote, and serve the business community, and that's never been more important. That's why we're delighted to bring you programs such as the one that we're having today. To start off, please help me welcome Vista Bank's Lubbock Market President, Brian Pierce, and General Counsel, Jared Craighead. Welcome, gentlemen, and I'm turning it over to you.
Well, thanks, Norma. We appreciate you having us on, and we certainly thank the Chamber of Commerce for hosting the series, the webinar today. I mean, Lubbock's really extremely blessed to have a chamber that cares about the city like you do, and care about the businesses that make up the great town that we have here in Lubbock. But I'm Brian Pierce. I'm the Lubbock Market President here in Lubbock, and along with me today from the bank is Jared Craighead. He's our Chief Counsel and kind of our resident expert on the Main Street Lending Program. A little bit about Vista Bank. You know, we've been out here in West Texas, serving West Texas and Lubbock for about 108 years now. We're a community bank. Our team members, most of our team members are from Lubbock. Grew up in Lubbock, went to Texas Tech, saw what a great town we had, decided this was a place that they wanted to stay, work, raise a family. So Lubbock means a lot to Vista Bank. We're a people-first bank. We really are out there doing what we can to help Lubbock businesses succeed, and we're a community bank, and I think that's really important right now. And to kind of get started here, I mean, obviously when COVID hit, had a huge impact on businesses, every business. I don't know if there was any business that we could say in our bank that wasn't impacted, and I don't think we could say there's any business in our bank that's better off today than they were before COVID hit. So, you know, it's been a tough deal, but Congress stepped in after all this, and I think everybody's somewhat familiar with the CARES Act that was passed. And when part of that CARES Act, I guess the most popular part of that was the PPP, or the Paycheck Protection Program. That was just really a huge deal and a huge blessing for a lot of local businesses. And I think everybody recognized at that time how important a community bank was for their business. I think locally, the Lubbock banks really stepped up across the board, working, around the clock, really. I mean, this was a 24-hour-a-day deal, trying to get PPP loans processed for everybody. And without that program, I think a lot of businesses just wouldn't have been open today. I think it truly saved a lot of businesses. But the other side of that, what people are probably not familiar with as part of that CARES package, was that along the side of the PPP, which was really, created to help with payroll, there was also a deal passed called the Main Street Lending Program. The program is being administered by the Federal Reserve. The program, they passed a $600 billion package on this, really geared to help small businesses and medium-sized businesses. And the idea of it was to help businesses that were in good financial shape prior to COVID hitting. So this was really come in to help these businesses. And like I said, where PPP was geared really towards, retaining employees, helping meet payroll. This side, the Main Street Lending Program, was help for businesses to help with their working capital needs. Vista Bank is one of the only community banks currently participating in the program. We're the only Lubbock community bank participating in the program. And we're actually only one of the little over the 20 banks in the state of Texas that signed up to administer and to work these loans. So we're very honored that we're able to do it. We think it's a huge program that's really impacting a lot of businesses across the state, and really helping local businesses here in Lubbock. So really what we wanted to do here today was to be able to get out some information about this and let everybody know For whatever reason, it just hasn't been publicized. We appreciate the chamber helping with this, but you just don't see a lot of information about it. Everybody knew about the PPP program, and I know that the chamber did a great job getting out that information. We appreciate them helping get information out on this as well. The program, I mean, I consider it really, it's a lifeline to businesses for helping with their working capital needs. And just to kind of start out, I'll go over a little bit about the program. One of the big differences and first questions that a lot of people ask is it forgivable like the PPP loan is? And the answer is no, it's not a forgivable loan. This is really more of a traditional bank loan that just has really favorable terms. It does require normal underwriting like a bank would do for really any kind of loan that we process. So it is different in that fact from what the PPP was. But the way these loans work, they are backed by the Federal Reserve. They come in and help the bank. They participate by taking a 95% share of the loan. So the bank only keeps 5% of the loan, and then we turn around and 95% is sold to the Boston Fed. That's where that is administered. And the loan terms on this are kind of unmatched, and I think she's putting up some of the terms on the loan that we can kind of go over here. And I think that's what's really great about this program. We're talking about a 5-year loan that's fixed, has a floating rate tied to LIBOR. Currently, that rate is around 3.2%. So it's a really favorable rate. A good rate out there. Loan amounts will range anywhere from about $250,000 and can go up to $300 million. So there's large amounts you can get there. The loan amount is based off of your 2019 EBITDA. So your earnings before your interest, taxes, depreciation, amortization, that's what it's based off of. And then it's factored in. You can get, depending on which program you use under the Main Street lending, anywhere from 4 to 6 times that 2019 EBITDA is kind of the maximum loan you would potentially qualify for. So like I said, the program was geared towards businesses that were strong financially before COVID hit. And so this is going to help them move forward from there. Some of the terms of the loan that are really favorable are it's a 5-year loan, like I mentioned. And in the first year, there's total deferment of all payments. So no interest or principal are due during that first year. In the second year, it does move into interest only. So you will have interest only for that second year. The third year is kind of the same. It's interest only within the 36th month. In that third year, you do have a 15% principal reduction due. So you really are able to take this money, apply it, do stuff with it, and then not really have any payments, no principal payments due until the 36th month. And that is just something that's kind of unmatched right now. And then same for the fourth year. It's the same type deal, interest only. Within the 48th month, you've got another 15% principal reduction. And then in the fifth year, when you hit that 60th month, it does require a 70% principal reduction. It's a large balloon payment there at the end. But those terms are really kind of unmatched. It's a tightening credit market out there. So being able to access terms like this and get capital like this, it's just really a great program. We're glad it's out there and glad we're helping administer it. There is no prepayment penalty on this. And then you kind of wonder what types of companies kind of qualify, and really it's any small to medium-sized businesses qualify. We've locally started working with hotels here. We've worked with restaurants, industrial, commercial, manufacturing, healthcare. There's really not a business that would not qualify under this as long as they were established before the COVID hit. But this program really helps bring working capital to the balance sheet. That's what it's really geared for. And then kind of what can you use the money for? And we're kind of seeing people use it for all different avenues, really, as far as working capital is concerned. I mean, we've seen a lot of refi of existing debt because the terms are so favorable. The rates are good rates. The rates are probably better than most you're seeing in the markets today. And then just the terms of it, what you're able to do with the deferment, some of that. So you're able to go in and actually roll in, if assuming your EBITDA was sufficient, you're able to roll in all existing debt that you've got. So we've seen a lot of businesses come in and say, okay, we're just going to wrap all of our debt up into one big loan here and do that. And then we've also seen, and then in addition to that, they may have availability for some extra funds for some future projects. So we've seen that. We've seen companies come in that just don't have a lot of debt but need working capital and want to go ahead and access the capital while it's available today. They may not be using all of it today, but they want to go ahead and access that. The loans do have to fully advance upon origination. So these are not advancing loans that you can draw out over time. So I do want to make that point clear. But that's kind of the quick rundown of the program itself. I'll let Jared, if you want to chime in and kind of add some additional color to the program, and I'll let you have at it.
Well, thanks, Brian. You did a great job explaining at a high level the program and giving a great overview in terms of what we've seen and what we've been doing at Vista. You talked about connections to Lubbock. My wife was from Lubbock. She graduated from Monterey High School, so I'm not a native Lubbockite, but have a strong connection there. She got her master's at Texas Tech, so love the Lubbock area and community. My father-in-law still lives there. Your last points, Brian, about refinancing existing debt have really been one of the key features that we've seen from borrowers in terms of taking advantage of this program. We've got all kinds of businesses that have had more expensive debt and really wanted to take advantage of this program. In the priority loan facility is the only facility where you're able to do that, but at origination, you can refinance out of more expensive debt, realize that no payments for 12 months, and then the interest only in the second year that Brian mentioned. And so it's been a great opportunity for businesses that have been impacted, and let's be honest, all businesses have been impacted by COVID, regardless of the industry or the economic sector that they operate in. And so to take advantage of these terms and be able to get out of more expensive debt, add working capital, as Brian said, to the balance sheet, has been an incredible opportunity for a lot of businesses. And frankly, the borrowers that we've worked with have said, this is an incredible lifeline. This is going to give us the breathing room and the runway that we need to wait until business gets back to pre-COVID levels. And it's exactly what the federal government designed the program to do. They recognize that every economic sector has been significantly impacted, revenues, business plans have been disrupted. And so they put together this program to try to give companies breathing room to get through the global pandemic. And so we've been excited to participate in the program. As Brian said, there are only about 25 banks in Texas that are participating. There were 13 that were participating whenever the program was launched, and you could register as an eligible lender. We were one of the first 13 original banks in Texas that were participating. And so it's been a lot of work. These are, as Brian indicated, traditional loans in terms of the underwriting process. And so unlike PPP, where a borrower would get us their information and we could have their PPP application submitted to the SBA within 24 or 36 hours, these take a little bit more time. They go through our standard underwriting process. We've got diligence lists where borrowers have to supply us financial information and more traditional types of documents that you would use whenever you're getting a conventional loan. So it takes a little bit more time, but the borrowers who have worked with us through the process and gotten us their information quickly, the process doesn't take months. If you're organized, you understand the program, you work with us to develop the calculations, we can get it through our underwriting process quickly. We get it submitted to the Boston Fed and they get us feedback quickly. And so it's been really neat to be able to provide assistance to businesses that support our local communities and that really are the economic engine of America. I mean, small business is where it's at. That's our bread and butter. And so we're incredibly honored and pleased to be able to partner with businesses to keep their doors open, keep their employees on the payroll instead of in the unemployment line. And we're just incredibly excited about our participation, very grateful to the Lubbock Chamber for helping us get the word out. As Brian said, you know, Paycheck Protection got a tremendous amount of publicity. This has taken a little bit longer to launch. I think people are less aware of the opportunity. And so to be able to be on and visit with you all and answer your questions about the Main Street program is a tremendous asset, we think, to the business community in Lubbock, but also to us to partner with you all to get access to the capital that you need.
Jared, I'll chime in also as far as how to apply and what they need to do. Obviously, all of our banks are now open. All of our lobbies are open here in Lubbock, so you can come in and see us at any location. We've got some really good resource material out on our website at vistabank.com, and there's a little form you can fill out there, and we'll contact you. So if you can fill in some basic information there on our website, it'll get it to us, and we'll immediately get with you on that. Or you can just call us at any location that you want to. So direct line here is 806-451-4918, or like I said, at vistabank.com. A lot of great resources out there and a place that you can fill out a form, and we'll be in touch with you shortly after that.
That's great. Thank you so much, gentlemen, for that information. If y'all have any questions about this program, if you could, you're welcome to submit it in the chat box, and we will get to questions and hopefully have some time to do some Q&A toward the end of the webinar. Thanks again. We really appreciate this information and y'all partnering with us on this.
Thank you.
So our next discussion, please help me welcome the South Plains Association of Government's Loan Program Coordinator, Naomi Couture, and Regional Services Director, Kelly Davila, to talk about another loan program.
Yes, good morning. My name is Naomi Couture, and I am the Loan Program Coordinator here at SPAG. And we are very excited to be launching our SPAG CORE program. We're hoping that it'll be a really great resource in supporting our small business community during these times. I know that at the very beginning of the pandemic, the options that were available to small business owners at this point have probably been exhausted, and so we're hoping that this will be a really good alternative for them. Before I jump into the nuts and bolts about how the program works, just to provide everyone with a little bit of background, the SPAG CORE program has been made possible through a grant that was awarded to SPAG by the Economic Development Administration, and so we are really hoping to put EDA's funds to good use out here in West Texas. So that's a little bit about us in terms of our SPAG hat. Just to provide you guys with a little bit of information about our other hat, which is Caprock Business Finance. We are a certified development company, and we specialize in SBA 504 financing. So we really like to think of ourselves as a one-stop shop for small businesses in terms of what's available for alternative financing. So moving on to our next slide. This fund was created for small businesses in the 15-county region that has been adversely impacted by the COVID-19 pandemic. The small business needs to have been existing, so fully operating for at least 2 years, impacted by COVID, which, as Brian mentioned, every industry, no matter what type, has been impacted. And it must be located within the 15-county region that's considered the SPAG region. We also have some funds available in the Panhandle part of the state, as well as the Permian Basin. So eligible uses of fund are working capital. We have defined working capital as overhead operations, payroll, rent, short-term uses of cash, utilities, professional fees, and leaseholder improvements, as well as inventory. Some of the ineligible uses of funds are speculative activities, projects outside of the designated geographic regions, in this case, the SPAG region, the Panhandle, and the Permian Basin. Projects that assist in the relocation of jobs to another labor market, purchasing or financing equity in a private business, or subsidizing interest payments on existing loans. Lending criteria. We are very excited to announce that this has a fixed interest rate that is extremely competitive. It's 2.4%. The maximum term is a 10-year term, and we're kind of anticipating the loan amounts to be anywhere from $25,000, $50,000, $75,000, and $100,000. The maximum being $250,000. We will be requiring collateral on a case-by-case basis, especially if it's over that $100,000 mark. Once the applicant has been funded, they will be placed automatically on a 6-month moratorium on principal payment. So for those first 6 months, it'll be interest, the loan will be interest only. There will be no forgiveness option with this program either. And after the 6 months, monthly payments of principal and interest will be required, and there will be no prepayment penalties. And from here, I'll go ahead and let Kelly finish the rest of our presentation.
Yes, thank you, Naomi. Good morning. Like Naomi said, we're really pleased to be participating in this morning. We really appreciate the Chamber putting everything together. As I was listening to what Vista Bank had, it's really nice because what they're offering is a little bit larger working capital loan, and what we're offering is a little bit smaller. So I think the Chamber did a good job of pairing, you know, the entire gamut of financing options for businesses impacted by COVID. As Naomi already mentioned, the goal of our program is to provide financial relief to businesses and industries impacted by COVID-19. I know that we all know restaurants, hotels, we all know the typical retail industries that were impacted by COVID, but we know in our regular financing world that that was every industry. I have not encountered a business that has not had some sort of impact by the pandemic. So I will just say that, you know, there's a threshold. We need to know how you were impacted as a small business, but I don't think that that's incredibly hard to meet simply because every business has had some sort of impact. While not requiring any sort of threshold, we are looking to see job retention. As Naomi mentioned, this is a grant that SPAG's received from the U.S. Department of Commerce Economic Development Administration, and we would love to be able to report to them at the end of our funding period that we've seen an impact on job retention in the region, and that's just good data to collect as well. So we will be collecting that information, but no small business is going to be held to a certain number of jobs or performance period in that regard. And the primary goal, again, is just sustainability of business operations. We were given a lot of flexibility by the EDA to design a program that fit this region. And, you know, one of the important things there is that we not, you know, limit what a small business could use these funds for. So we made a very, very broad definition of working capital in hopes that what we're offering is something that will impact a lot of small businesses. And as she mentioned, I just kind of want to put out there again, just to kind of reiterate, our maximum loan would be $250,000. We are expecting that the majority of them will be under $100,000. So again, this kind of covers the other side of what small businesses need. So a little bit about our process. I did put our information in the chat box as well, but we have tried to make this as simple as possible. So there is an application form. It looks very similar if you participated in Support Lubbock. If you did PPP, it's 2 pages asking some very general information about your small business and asking you to provide some information on how your business was impacted by COVID-19. So very, very simple. It's a fillable PDF. We are also requiring 2 years of business tax returns. As Naomi mentioned, the business needs to be in operation for 2 years, and this is how we verify that is through 2 years of tax returns. And it's also how we provide our local loan committee with information about how the business was operating prior to the pandemic. So that is kind of the big part of the underwriting process for us. And then we will be requiring interim financial statements. So that's a balance sheet and a profit and loss statement within the last 90 days. And then a personal financial statement for each business owner over 20%. All applications must be emailed to our email box, which is spagcore@spag.org. I put that in the chat. It's also here on the screen. All of this information, and I'll have that on the next slide, is on our website as well. For those of you who know SPAG or Caprock, we're a very, very, very small team wearing a lot of hats, as we all do in local government, and especially in our alternate financing world. So we do not necessarily have capabilities besides our email box, but our entire team is surveying that. So we'll be very quick to respond to any questions you have. You can submit those to the email box, and you can also submit your completed application and documents to that email box as well. The applications will be processed in a first come, first serve complete order. So we do have a limited availability of funds. For the SPAG 15 county region, we have up to $4 million. So we do have to have, a processing in order. Let me go on right there. This has our website here at the bottom. So you'll see www.spag.org, and then also that email box, spagcore@spag.org. The information will soon be available on our Caprock website as well, but it's currently being rebuilt. So as goes with construction. On the SPAG website, you can find the application that I referenced, this presentation, as well as just a summary about some of the terms and information about the program. As I mentioned, we feel very fortunate that we were able to design this program for the small businesses that in the SPAG region. And we really appreciate the Chamber offering to let our presentation be available beyond just the city of Lubbock. And we really appreciate that partnership because I think it's going to have a big impact. Just a little bit about the evaluation process. I kind of mentioned what you have to submit. We do have a local loan committee that reviews the projects, but that process is pretty streamlined. We've been through this before, so I think we have designed a good process to keep things moving. And once we have that local approval, we're able to fund all of the loans out of our office here at SPAG. So it shouldn't be too much of a lengthy process to apply, get awarded, and actually get funded. Yeah, that's all we have. Again, we really appreciate you all taking time to be with us this morning.
Thank you, Kelly and Naomi both, and thanks to SPAG for partnering with us to get this information out as well. Congratulations on the rollout of this loan program. Now, please help me welcome Amy Marquez, Vice President of Program Services and Events for the Chamber. I don't know if we have any questions in the chat box yet or not. You're certainly welcome to put your questions there. I think we've actually received a few questions in advance just based on our announcement of this webinar. So Amy, I'll turn it over to you now.
Okay, great. So the first question I received, good morning to you all, is for Brian and Jared. Can we find out of all the Main Street loans for which Vista Bank has applied have been funded? In other words, did the borrowers receive the loan proceeds?
Yeah, thank you, Amy. I'll take that, and then Brian, you can chime in as well. Every loan that we've submitted to the Boston Fed has been approved and funded. Sometimes they get kicked back because the Boston Fed is looking for very specific things and has very specific programmatic requirements, and sometimes they'll kick it back and say, hey, we'd like to see this slight modification. In some of our loan documents, there was an example where they kicked one back because milkshake had been misspelled. So they're reviewing these with a fine-tooth comb, and they're like, hey, resubmit this and spell milkshake correctly. So and whenever that happens, we're happy to make those corrections and resubmit. But every loan that we've submitted has eventually gotten funded, and we're proud of our track record and figuring out the secret sauce, if you will, in terms of getting these Main Street loans funded.
Thank you for that. Okay, the next question I have is for Naomi and Kelly. What is the best way to contact someone with questions or to submit the application?
I don't mind taking that. As I mentioned, all of the information that we presented this morning is available right now on our website, www.spag.org, and I put that in the chat box as well. Everything, whether that's the application, the attachment required documents, or any questions, can go to our email box, which is spagcore@spag.org. And I put that in the chat box as well, so that any information can flow through that. Like I mentioned, we do have a small team, but we pride ourselves on being very responsive. So everything will get responded to very quickly in that email box.
I think this is, oh, sorry, Naomi.
No, that's okay. Amy, I just wanted to add, we have all of our documents also, they're also in Spanish. So if for some reason, you know, we have some monolingual speakers that are interested in the program, please email us and we can provide everything in Spanish as well. We have some team members on our team who are fluent, so that won't be a problem at all.
Perfect. So this is a more specific question for you two. What if my business is needing large equipment or something that is not working capital?
Yeah, we actually, like I mentioned earlier, we have other loan programs to help businesses finance those needs. We operate a SPAG revolving loan fund where large pieces of equipment is an eligible use of funds. We also operate a really successful SBA 504 program where that financing is available for commercial real estate or equipment. So we've got other sources that we will kind of steer you in the right path or direction. Like Kelly mentioned earlier, this is more of a working capital program. And so this is to help businesses sustain their operations and keep their doors open during these hard times.
That's fantastic. Okay, next question. Can you describe or explain what is meant by interim financial statements?
Interim financial statements, we are essentially what we would like to see is for, you know, you usually file your tax return, your taxes at the end of the year. They're available, I don't know, sometime during the month. But what we would like to see is how your business is doing financially during the last 90 days. Again, it's kind of like how Brian described the Main Street Lending program in terms of we would like to see strong historical cash flow. However, because of COVID, we kind of want to see the financial impact to determine eligibility for the program.
And I would just add, we ran into this, I'm sorry, Amy.
No, I'm sorry.
With our earlier COVID program. And so if your small business is, for example, a sole proprietorship, or for whatever reason, that is not something you prepare on a regular basis, our team did prepare sample documents. They're very, very, very basic. But like Naomi said, they'll at least provide enough information so you could email the email box and request that, and we can send that to you, just so that we can see what's exactly going on with the business during the last 90 days. Like, so what's the impact been? So again, we can provide those samples if necessary. We can't give a whole lot of guidance on filling them out, but we can provide you a sample document that is pretty easy to use.
So I've got another question here, and I think this is for all four of you. So how long is the process from approval to receiving funding from both institutions?
I'm happy to take that on behalf of Vista. So as it relates to the Main Street Lending Program, what we've seen is once we've gotten all of the information through our underwriting process and the loan committee has approved the application, we submit it to the special purpose vehicle, and it's a conditional approval that we give, and it's conditioned on the Boston Fed agreeing to purchase 95% of the loan. So all of the loans that we've submitted have been on the basis of that conditional commitment from the Boston Fed. And once we do that, we upload all of the documentation to the portal. And what we've seen is anywhere from 3 days to 14 days, the Boston Fed will review all of the different documentation that we've uploaded, and then they'll get us feedback. And once they get us feedback that, hey, this is approved for a commitment letter, we're going to purchase 95% of this loan, then they alert us to that fact, and then we have 3 days after receiving that commitment letter to fund the loan. So it's a very quick process once you go through underwriting and the loan committee here approves it and we get it submitted to the portal. At the most, we've seen 14 days.
For our side with SPAG CORE, same thing. If we get a complete application, our underwriting process is very quick. It takes a day or two. And then we are calling regular loan committee meetings. Again, we have a local SPAG CORE loan committee. And once that's approved, then we start the process to actually fund the loan. That to me is kind of where the timeliness can take place, but probably around, I would say average is probably going to be around 30 days before money is deposited into your account, simply because of the actual funding portion.
Honestly, I think that we would rather under promise and over deliver. If it has the potential to move a lot faster than 30 days, but just to be safe, we'll say 30 days.
We did earlier this summer do about 60 small business loans in about 3 weeks, and that was about $2 million in funding. But we're hoping for a more steady pace this time around, so we can go home and have dinner with our families and that sort of thing. But like Naomi said, we'd rather set expectations.
Sounds great. Thank you all. Okay, so from the Zoom group chat, we have a question here for our Vista partners. Since the Federal Reserve is taking on 95% of the risk in the Main Street lending programs, is this essentially a federally guaranteed product similar to SBA 7A program?
I would say that it's not identical in that, they're purchasing 95% of the participation, but all of the collateral and the requirements under the program is that we're pari passu with the federal government. So we'll share equally in any losses that take place to the extent that would happen. In terms of a guarantee, that's not how the federal government has characterized these loans. It's a purchase of a participation. And there are very detailed requirements as it relates to if you have other debt, that this loan has to be pari passu with your other debt obligations. And so it's not exactly a guarantee, it's a participation. Brian, do you have anything to add?
No, that's exactly right. It is a participation. And so we do look at collateral on these loans. We didn't really go into that. We do look at recourse on these loans as well. So I just want to make sure that's out there.
A second part to this question is, does interest accrue during the first year of the deferment?
It does. Interest accrues at the origination of the loan, and it gets capitalized to the principal balance on the 12th month, and then on the 13th month you start interest-only payments.
Okay, and the third part to this question. Brian, you mentioned a 15% to 70% principal reduction in years 3 to 5. Did you mean principal deferment?
No, not principal deferment. There is no principal due until the 36th month. And at that time, there is a 15% principal amount due at the end of the 36th month, at the end of the 48th month, and then at the end of the 60th month, it goes to that 70% for your 100% there.
So one of the last questions in the chat, please make sure you enter these in here since this is the last one that's here. If your business has done well and it's an essential provider, do we qualify to help expansion?
Yeah, I would just say
Absolutely.
from our end with SPAG CORE, doing well is not a disqualifier. And simply because, like I mentioned earlier, we're looking for an impact by COVID-19. And even if you were essential, you were impacted in some way, whether that was inventory is also allowable expense, as I mentioned. So whether your supply lines were impacted, everyone's had an impact. So doing well is not going to hurt you access funding in terms of SPAG CORE.
Yeah, in terms of expansion of your business or a building, we would much rather offer some of our alternative financing options. But yes, like Kelly said, that's not going to disqualify you.
And along those same lines, 504 is less than our fixed rate of 2.44% right now, if you've checked 504 rates for expanding commercial real estate. So we'd offer you a better rate with 504.
And as far as the Main Street lending program goes, it can be used for expansion as well, the funds.
Great. Well, thanks to all of you. It looks like that's all of our questions. Thanks again on behalf of the Lubbock Chamber of Commerce.
Naomi?
Oh, yes.
Really quickly, this is Jared. I don't think we've made this point, and it's an important one. So the Main Street lending program is set to expire on December 31st. And so to the extent that you're interested, reaching out to Brian and his team sooner rather than later is important, because the program expires on December 31st. And we want to make sure that any business that's interested in learning more about the Main Street program does that sooner rather than later. So I apologize for interrupting. I just want to make sure that your viewers knew that was the expiration date.
And I'll expand on that a little bit. It does have an expiration date, but it is similar to what happened with PPP. There is an allotted amount of $600 billion, which seems like a lot of money, but yet we saw PPP run out of funds in that first round. So that could happen as well. So like Jared said, if it's something you're interested in, don't delay. Let's get this going.
Absolutely. And I know that y'all will be ready and eager to visit with anyone that contacts you. So thanks for interjecting with that. That's very important. On behalf of the Lubbock Chamber of Commerce, thanks again to you both, gentlemen, and also to Naomi Couture and Kelly Davila from the South Plains Association of Governments, and to all of you for being with us today. We hope you learned a lot of useful information today. And with that, we are adjourned. Have a great day. Thanks again.
Thank you all.
Thank you.